It's me Pavitran here. Today we're gonna do a weekly forecast of crude oil, and before that, a quick recap of previous week what had happened. As you can see, I clearly mentioned you about what had happened and or what will happen in the coming week. I was expecting some kind of if if this region or this recent lower low has been taken out on morning, then we will be heading down towards 38 or 39 to take some support over this region. So luckily that did not happen. On a morning itself we got a big bullish candle over here, and simultaneously the next candle of follow through has happened over there. So as you can see, this was the follow through candle. It gave a close. So if follow through candle has came from the morning, or even as you can look in the past on Monday, if there is a big bearish opening, if follow through comes, then that whole day it's going to be a negative. The slight indication is that on a big bull candle, for follow through candle has happened, then that's clear indication for us that market is going to be on a bull side today. And the recent lower has been taken out. After taking out, it even gave a follow through over here. So if you can look at the rally over here, and last week or 2 weeks before, I said this recent higher low, and if the recent higher low has been formed, if you can place a buy order over here, and you just not have to expect this kind of move. But what I said was, if you can place order here, then you have to trail. Why? Because it's clearly a bull market. So in this case, it's a kind of an bear market. Right now the trend was slightly bearish, and the recent high low has been taken out. So whenever this kind of move happens, you need not initiate a position over here, just have to follow the basic price action candle. So this was a bull candle, and immediately it went up, it faced rejection, it again came down. So right now what we have to do, you have to initiate a position in this candle. So this the candle next to that. Why? Because we have to initiate there. Sometimes we won't get a follow through over here, sometimes it can be a fake breakout. So for confirmation we have to wait for a price to break up and retrace down, and if it again gives a kind of confirmation over here, so this is some kind of an hammer pattern over here. So we have to enter the next candle. So in the slide we can enter into retracement, or even keep this as a level for an entry. So you can decide for you whether you have to take entry over around 40.80, or you can enter over with somewhere around 40 or even 41. So you have to place your entry over there, and you just have to trail. I'm not saying you will get a big move like this. What I'm saying was, as usual, a move happened, you trail your stop loss to here, and after that you switch your stop loss to here, and after that you switch your stop loss here. So in the third region your stop loss has been triggered out. This is the place where your stop loss has been triggered out. So that's a place where somewhere around 41.60. so you have entered at 41, and the stop loss has been triggered down at 40.60. so 60 cents is your profit. And the structure has been, if you look at the structure, market is still bullish. It had made an higher high. Now the market is heading down towards to make a higher low. So after making a higher low, if you see any kind of a bullish candlesticks pattern, then you can enter, and you can trail your stop loss with the two candles previous lows as your stop loss. You have to keep on moving this. Once the structure has been made, what had happened, you just have to follow the structure, how it is behaving. And on Tuesday the recent high low has been taken out. So this is the place where the higher low has been taken out. So immediately you should not enter, or you should not place your stop limit order over this region. Why? Because this is a kind of a fake move that will be happening in the market to take out the weak longs. Weak long in the sense, after this bullish candle which has formed somewhere around 2:30 on Tuesday, on the retracement I would have entered. Say for example, I would have entered in the retracement. After that, what had happened, the market is slightly going down, so I would have placed my stop loss just below the bullish candle low. So what the operators or the person who is having a big amount of chunks usually think after this pattern there is a possibility that many of them have placed a stop loss over this region. So we don't know and how it is going to react. Maybe they will just push the price below this region, and immediately you should not be going and selling here. So we have to wait for a follow through breakout. As always see, this is the candle which given breakout, this is the low which has been made. If this low, if it gets closed over there, the candle gets closed, and then only market will head down. Until and unless there is no follow through, it's a fake breakout. This is the region where the fake breakout has came. Why? Because there was no follow through sell over this region, there was no follow through. Then what is the point of we selling and keeping the stop loss over this recent breakout candle? So you should be aware, if you had placed stop or if you placed sell order limit sell order at 40.50, then it will be a good entry. Maybe this is the case. Lower A has been taken out in this candle. As you can see, it went up, it again came down, and this is the right confirmation. This is the retest for us. After this retest only we have entered. The same way it should happen here. It should break and it should retest, and after that it can head down. So in this case it went down, this is the place it came down. There is no retest over here, there is no close over here, nothing over here. So this is a fake breakout. So this kind of moves can be identified to some extent. If we get a candle close below this region or below this lower low, if we get a candle close, then it's an indication that the market will head down further. So after taking out the week long, see, market is headed towards another rally. So I was expecting a market to touch, after breaking the zone I was expecting market to touch 43. That was the reason I made over here. I was expecting that. After that I see bearish candle came, and after that it started to struggle as usual. There was no big movement as of now. And if you can draw a trend line, or let's see if you can connect this trend line, this is a kind of maybe it's keep on forming this, it's keep on rising, right? If you can see this pattern, then it will be clear for you. And so if we get a break over this, maybe we will get, see, this is a consider, or okay, this is the first higher low, and this is the second higher low, and this is the third higher low, this is the fourth higher low. Why I am saying this higher low is based on this trend line alone. So this is higher high, this is second high, and this is the third higher high. As you can see, market is keep on making higher lows and higher highs. So what we can expect is that market is also in a contracting phase. Most probably it can break this level and head higher. And if this level gets broken, then retest will happen, then we can expect a further down. Until and unless any of this move is valid, how we can validate is we have to get a clear breakout of this trend line, and it has to head further up or it has to head further down. Until and unless that happens, we don't think the market is not going to go anywhere. It's going to be stable. And as usual, what is the today's or coming weeks resistance is, maybe if I can shrink, or maybe 4 hours will hit. So this is the recent one. So why I was keep on insisting 41.5 41. So this is the place, this was big sell off as came. I was heading for that one, maybe around 43 or 43.502 here, sorry. So this is the place I'm expecting a market to get some stiff resistance over this region. This is the place. So, or even you can drag this out in 4-hour time frame, it will be useful for you. And if not, you can just switch even to 1-hour time frame. You can try to connect this, and let's see how this goes on. Just a minute, give it a time. Okay, yeah, this is the high I was talking about. and small error in this, sorry. So this is the place I was talking about, maybe around 43.502. so this is the place I was talking about. So if you can zoom out here, you can understand why this 43 is so important region. As you can see over here, this is a region, each edge has been acting as a resistant over here. This is second, this is third, this is fourth, this is fifth, and after that there was the price has not been able to come near this place. This recent price came near this region, and it's starting to fall from this. So whenever price is coming near to the region, it's struggling a lot over that 43.5 region. So this is an important make or break region for me personally. Why? Because I have been a sell on rise market for crude oil for somewhere around 6 to 7 months nearly. Whenever market is heading for 43.5, then I will keep on selling the crude oil. Maybe if it breaks or if it closes in daily above 43.50, then I will become a bull. Until and unless we see a close above 43.50, it is a clear sell on rise market for me. So what are the levels I will be watching very closely is 43.50 will be the crucial level for me. If it breaks and close on a daily, or to get further confirmation, I will wait for a weekly candle close to 1 or 2 weeks is very good for me. And if it get a close over that region, then I will become a bull in crude oil. I don't know very well about the fundamentals, because most of the time it has been clear that the fundamental is very weak in crude oil because of the COVID issues that has been going on. Even though that has been going on, but the big many players are trying to pump in lots of cash into the market, and they are making the oil prices and the stock market prices to boom higher. So the reality and the fundamental and the reality does not match in this case, because of some of the smart players entering with tons of money and trying to push the market away. So I don't want to stick to the fundamentals and don't want to get trapped over there. Whenever this is my make or break even, as I said, when 43.50 is taken out, then I will be a bull. After that it's going to be as usual, and higher highs and higher lows will be information. So what I said was, on the last week, market has changed its view from on 4 hours. See, this is a market structure as lower high, lower high, lower high. The day it breaks the recent lower high, see the structure has been changed into bull mode. It has made a first higher high, this is the recent higher low, second higher high, second higher low, and right now it has make again, this is the recent ones that was lower high, that was trying to get into a bear mode, but the higher lows has been made, and still market is still in a bull phase when compared to the recent bear mode. See, this is the recent bear mode. See the structure, how this has been a clean structure, lower high, lower low, lower high, lower low. So it's very obvious, right? If you can follow the structure and if it gives a follow through over it, then you should be well and happy to grab it with both hands, rather than having a wrong position and you just keep on averaging or not exiting your stop loss. It's going to be a huge burden for you. This is just a simple technique on how to find the market sentiment. I hope this one helps. Coming week levels is simple and far more interesting for me. 43.50 will be a crucial, 43 and 43.50 will be very crucial levels for me. Let's see how this week goes on. Last week it's not been a kind of a rage bound day for me, not a huge one. Not a fan of these kind of movements in crude oil. I'm expecting some kind of a big random moves so that I can able to pocket a lot of money. Let's see how this week goes on. Thank you.